Hey guys, welcome back to my portfolio and the $0 to $100,000 stock trading challenge on Robinhood. I will say this is probably the worst year to start a challenge like this because, we've seen how the markets have been the past couple months since the beginning of the year. The average retail investor is down about 28% in their portfolio. I'm down about 16% since the beginning of this year. But again, I wanted to be transparent with you guys and show you kind of my positions and what I plan on doing in the future as well. Also, I wanted to say too that this year kind of opened my eyes as an investor, as well as probably a lot of other people, to how much it actually sucks to just watch your account slowly go down over 6 months. It's not really fun, it really sucks. And so with that being said, I wanted to kind of shift my strategy a little bit with this account and with this challenge to more of a less risky, more of a long-term approach. Because like I said, I wanted to focus on not losing money and focus on getting that 5 to 15% return year over year instead of these, kind of quicker, riskier trades like I would do back in college. So I'm graduated now, but back in college, I would have, $3,000 to $5,000 at a time. Basically just toss it into Robinhood and throw it into penny stocks or tech stocks and kind of just hope for the best without any strategy at all. And then I would, lose $5,000 to $10,000 at a time. And so with this $20,000, I don't want to just lose it all in one trade. So I'm putting it into, a lot of different stocks and ETFs that are less volatile and less risky, and hopefully seeing that $100,000 here soon. And of course, with the market that we're in, getting to that $100,000 might be kind of hard. It might take a long time, but nevertheless, I'm going to keep uploading videos like this, keep updating you guys on my positions and the funds that I'm investing in, and hopefully we can get to that $100,000 in the near future. And like I mentioned in my other videos, I am putting about $500 to $1,000 in this account every month, and then it's only pennies right now, but any ad revenue that I get from these videos, I'm just gonna drop it right into Robinhood. So as more people watch these videos, I'm just gonna drop it all back into this account as part of this challenge. So with that being said, let's get into some of the stocks and ETFs that I am currently investing in. So the first one is one of my biggest positions. It's the XLK Technology ETF, Technology Select ETF. And I'm currently down about 5.62%. And I really like this ETF specifically because it's still technology focused. It's still, very tech heavy, but it doesn't see the volatility like some of these tech stocks see. The 1 year return is a 1.28%. And that's actually pretty decent compared to some of the other ETFs that I'm invested in. The other ones have seen about a negative 5 to 7% 1 year return. And like I said, this one is 1.28 positive. So it's still a decent return and doesn't see, again, like I said, doesn't see too heavy of losses, which is why I really like this ETF. So my average cost is 148, and right now it's currently at 140. So down about 6%, and we'll keep continuing to dollar cost average on this ETF. So this next one is SPY-G. It's very similar to the SPY ETF, but it's more growth focused. Haven't been buying this one very much this year, just buying it here and there as the market has been hitting all-time lows. And so I have about an 11% loss, only about $1,000 in this one, but still one that I consider dollar cost averaging and will continue to buy long term. The next one is VOOG. Now this is another pretty big position. I have just under $2,000 here, down about 5%. I've actually been dollar cost averaging this one pretty heavily as well as the market's been hitting lows. And so my average cost is $248 and its current cost is $236.33 and down about $80, which isn't too bad at all considering I have about $1,600 in here. And this is another one that I really enjoy. Still pays a dividend, and the expense ratio is still fairly high for a Vanguard fund, but this is another one that I really enjoy and will continue to buy as the market kind of fluctuates. So getting into stocks, this first one is MasterCard, and it's actually done very well this year. Compared to other stocks, it's done fairly well. I'm up about $16 or 1.35%, and this is one of my little bit bigger positions. I have about $1,200 in here, and again, still seeing a positive return, which is great news for how the market's been doing this year. Next one is Thermo Fisher Scientific, up about 3% or $4, so not too bad on this one either. The next one we have is Costco, down about 7%. So once Target released its earnings this year, Costco as well as the other retail stocks took a huge hit, so I'm actually down about 7% with Costco, $65 loss. But I'm actually going to be buying Costco a little bit more heavily this year because it's just a brand and a company that I really believe in, and the stock has been performing incredibly well these past couple of years. So I'm actually going to be continuing to buy Costco throughout this year and hopefully seeing a little bit higher of return. So next we have Target, and like I said, Target took a huge hit because of earnings. Not as many people have been buying from Target and from these retail stores. A lot of people have just been saving their money this year, and so Target's earnings were really crappy, and so they're down about 30%. As you can see on this chart, it's down 28%, and my loss is a 30.25% or $700 loss, which is one of my biggest losses. But again, you don't lose money until you sell, so I'm not going to sell Target until I see a little bit of a profit, which might take a couple of years, but I'm going to just continue to hold Target because, as you can see, I'm getting $8 in a dividend every quarter, which is, at least something to help ease the pain a little bit. And luckily, I did sell out a couple shares before earnings, so I did save maybe about $1,000, but again, I'm still down about $700 and will continue to hold Target for the next couple of years. This next stock I really enjoy too. It's Cintas. It's a cleaning company. They provide cleaning services for other companies, up about 5% or $23. Next one is Integris, down 4%, $30 loss. Another Vanguard ETF, it's down about 5.25%. Pretty big holding here. I have about $1,100 or $1,200 in this fund. And this is another one, but I've actually been dollar cost averaging quite a bit this year. And as the market goes down, some people are saying the market's going to dip and crash again. So if it does, this is another ETF that I'm going to keep dollar cost averaging even more because it's a little bit safer of a fund, doesn't dip down too much. Down about 6% this year to date. So not down too much. And again, I'll just be continuing to buy this one and hopefully matching that cost and hopefully seeing a profit here soon if the market recovers, of course. A couple others that I've mentioned before, Arthur J. Gallagher, up about 1.2 or 1.8%. Zoetis, down 11%, pretty big loss there, down $80 here. Next one is Abbott Laboratories, down 1%. So this next one is the Vanguard Total Stock Market ETF, and I haven't been buying this for a couple months, so I am down about 12%. Haven't really lowered that average cost, which I probably should have been doing, but again, haven't really bought into this one for a while, but I'll probably keep buying as the market levels off and maybe even as it recovers too. I'll just continue to buy this to lower that average cost down. So with these next two ETFs that I'm going to show, I have mentioned that I want to make it a little bit safer of a fund. So this makes it a lot more diversified. So this next one is XLU. This is the utility sector ETF. And this year it's up 13.2%. So even as the market's been dipping, the utility sector has been doing really well. And so I'm actually buying into this fund a little bit more to diversify the account and keep it so the losses aren't as bad. Again, like I said, different sectors can still do well in bear markets, and this one is a good example of it. This next one also as well is a value ETF. It's VTV. This is another Vanguard ETF. As you can tell, I really like the Vanguard ETFs. So this one is VTV, and it's still up for the year. It's 1.18%. And it pays a pretty decent dividend as well, 2.28 every single year. And as you can see down here, I'm going to scroll down. It shows you its average return since 2004, and that's about 9%, not including the 2.2% dividend every single year. So again, this is just another way to diversify the account and buy into the value side of stocks. So a lot of the other stocks that I own, it's either I own one share or a fraction of a share, so it might get a little boring. So I do own about 30 different stocks, but I just showed you guys the ones that I own more than, a couple $100s in. And as you guys know, I am a big fan of ETFs. I really do enjoy investing in diversified funds such as those ETFs that I showed. And if you guys have any recommendations, or if there are stocks and ETFs that you really enjoy, that you've seen solid returns on, that you see, a great future outlook for, leave them in the comments below. I would love to check them out. That's one of my favorite things to do, is doing research on stocks and ETFs. So yeah, leave them in the comments below and I would love to have a discussion there. A lot of people are saying that the market's going to actually continue to dive down or even crash, 20%. I'm not sure about that. I'm not a market analyst. I just kind of do the normal, effective, long-term investing into diversified funds, which is why I really like ETFs. And a lot of you might be saying, what about the expense ratio for these ETFs? Well, I make sure that these ETFs pay a dividend to offset the cost of the expense ratio. So that's why I really enjoy investing in ETFs. So hopefully we can see a market recovery here soon and get back on track to that $100,000 goal. And thanks guys for watching these videos, and put a like on them, of course, if you enjoy them, and that way we can get to the $100,000 a little bit quicker. And of course, like always guys, this is not financial advice. This is purely just for entertainment. I really want to take you guys on this journey and show you what I am investing in. So thanks again for stopping by, and I hope to catch you later. See ya.